The UAE's inflation rate fell sharply on an annual basis to 1.2% in December compared to 2.6% in November, according to the UAE National Bureau of Statistics. The figures cited by Reuters showed that housing and utility costs, which account for over 34.1% of consumer expenses, rose 1.6% from a year earlier. Food and soft drink prices, which account for nearly 14.3%, climbed 0.5%, while transport costs rose 0.4% after the UAE increased domestic fuel prices for December. London-based consultancy BMI Research said inflation in the UAE will stay low throughout 2017 as the impact of subsidy cuts wears off. The consultancy added that headline consumer price index will average 1.8%, the joint lowest annual average for 6 years, with housing and food to be the main drivers of inflation. The Abu Dhabi National Oil Company yesterday signed an agreement with the China National Petroleum Corporation, awarding it an 8% interest in Abu Dhabi's onshore oil concession. According to a statement from Adnoc, CNPC contributed a sign-up bonus of 6.5 billion dirhams to enter the onshore concession, which is operated by the Abu Dhabi Company for Onshore Petroleum Operations. The agreement was signed by Adnoc's Group CEO and member of the Supreme Petroleum Council of the Emirate of Abu Dhabi, His Excellency Dr. Sultan Ahmed Al Jaber, and His Excellency Mr. Wang Yilin, CNPC's chairman. The agreement, which is backdated to January 1st, 2015, has a term of 40 years. According to His Excellency Al Jaber, the agreement with CNPC strengthens and deepens the strategic and economic relationship between the UAE and China. CNPC is China's largest oil and gas producer and supplier, as well as one of the world's major oil field service providers. It is responsible for 52% of China's crude oil and 71% of its natural gas production. CNPC also has oil and gas assets and interests in 37 countries in Africa, Central Asia, Russia, Americas, Middle East, and Asia Pacific. China is the world's second largest energy consumer and was a major importer of crude oil in 2016. It is also the UAE's second largest trading partner in the Middle East, with trade between the two countries estimated to have increased to 60 billion dollars in 2016. Emirates Central Cooling Systems Corporation, better known as Empower, reported on Sunday 641 million dirhams in net profit for 2016, marking a 24% increase from the nearly 512 million dirhams profit the company had recorded in 2015. The company showed that its total revenues for the year reached 1.84 billion dirhams, up 11% year-on-year on the back of growth in customer numbers and added efficiency. At a press conference in Dubai, Ahmed bin Shafir, the Chief Executive Officer of Empower, said the company is targeting a similar growth rate this year and was confident Empower would see 2 billion dirhams in turnover in 2017, supported by new projects. He added that the company currently has around 900 million dirhams worth of projects in the pipeline for this year. Discussing growth plans for 2017, the CEO said Empower is in talks with 3 companies about possibly acquiring one of them or more. At the end of 2016, Empower had 1.3 billion dirhams in debt, according to the CEO, who added that the company plans to take that figure down to 900 million dirhams this year.
The result, it's reflect how Empower is performing over the years. This result, it's not 1 year performance, it's actually over years to reach to this outcome. And we strongly believe that Empower can do much more for the next years. Definitely, today, when we announce the number, we are very excited and we are mentioned, but trust me, to me, the year is closed since November. And I know what's the number, and I'm focusing on 2017. I want to see how the first quarter will come, then the next quarter. I would estimate also double-digit growth for 2017 with a good growth in the net profit, a healthy, robust way. And I'm very confident that the Empower team, with the confidence, with the dedication and concentration, that we need to increase our customer base to reach 100,000 individual customers. It might not come next year, but we can get 80, 85. So, there is a lot of points that we need to tackle to take Empower from level to level. This is really make us excited.
And Dubai Chamber of Commerce and Industry have unveiled the key objectives and initiatives outlined under its 2017-2021 strategy. Hamad Bouaimim, President and CEO of Dubai Chamber, has said that the new customer-orientated strategy aims to boost competitiveness and growth within the private sector in line with the Dubai Plan 2021, reinforcing the Chamber's role as a trusted partner to Dubai's business community and a bridge between business and government. 6 initiatives are outlined under the new strategy, which aim to ensure that the Chamber supports the government in executing the Dubai Plan 2021, enhances its international network, promotes Dubai as an attractive market to establish commercial and business ties, leverages its relationships and stakeholders to become the voice of Dubai's business community, develops the Emirates' entrepreneurial ecosystem, and provides the best and most appropriate services to members through strong engagement and innovative solutions. Meanwhile, the Chamber is planning to strengthen its international presence in 2017 with the opening of representative offices in India and Brazil. The new offices will explore new trade and investment opportunities in those countries and complement the Chamber's network of branches, which spans promising markets across the Middle East, Asia and Africa.